Time now for the word on Wall Street. Top investors watching your money. Joining me now is Dominari Securities CEO Kyle Wohl. Also with me here on set, Ryan Payne. Kyle, good morning. Thank you for being with us this morning because we do have some futures trading at least until 1 p.m. Eastern time. And it looks like we're actually going to have a good kickoff on Tuesday. We shall see. But of course, stock and bond markets are closed for President's Day today. There are futures for you. A lot of big data comes out this week. So you're going to get the January Fed minutes out Wednesday. But the bigger one's going to be December PCE. That's Friday. We're going to be looking at that. And then also within tech, you've got AI disruption fears that really hit the markets last week. And that spread beyond tech. It went into real estate, trucking, financial services. Down the S&P 500, each fell about 1%. The NASDAQ had its longest losing streak since May of 2022, dropping more than 2%. That's the fifth straight weekly loss. But back to this AI story with you, Kyle. Rampant AI demand is fueling a global memory chip crunch. And now chip makers are prioritizing high bandwidth memory for NVIDIA systems. But that leaves behind smartphone, auto, and PC makers that face shortages. That jumps the cost up. That squeezes margins. Kyle, your reaction to that?
I think you're going to continue to see it. Like, I know on the lunar calendar, they're talking about it's the year of the horse. This is the year of robotics. This is the year of the robot, right? Whether the robots that fly in the sky that we call drones or ones that are underwater or humanoid automated robots, you're going to continue to see a lot of investment in that space. You're going to need more AI chips because if you look at what's going on with AI and what's going on with robotics, it's almost like the PC wars of the 1980s and 1990s. You had IBM making the PC, you had Intel making the chip, and then you had the software made by Microsoft. Then you had a fully integrated company like Apple. You're going to see that right now. Tesla is going to be the fully integrated company in robotics. You're going to have NVIDIA continue to dominate in the chip space, but they'll have competition. You'll have Grok, you'll have Cerebra systems. But I think the beginning of the spending in AI, especially now that it's going into fully automated robotics, it's going to continue to grow. And I think you're going to see an IPO frenzy of a lot of these robotics companies trying to get public and access to capital markets, whether it's Function AI, whether it's 1X, or whether it's Foundation Robotics. I'm pretty excited about the sector.
Interesting. Well, obviously, we are looking ahead to a lot of blockbuster IPOs and deals made. Ryan, how do you see it?
I think it's a really good point. I think what you have to think about is we're going to need a lot of precious base metals for this robotics, whether it's AI infrastructure, whether it's electrification. So I think what you want to start, as an investor, what you want to think about here is what are the adjacent trades here? Where else can you be putting money that's going to benefit from the fact that we are having this revolution now in robotics, which is going to be very interesting to see these robots.
No, it certainly will. It's everywhere, to Kyle's point. But then when you see the deals and these IPOs come out of that, that's where the average investor can take a piece of that. So, Ryan, let me stick with you on this. Look at the metals. Gold and silver prices this morning are pulling back. So gold is still sitting above 5,000 barely, but we have had a big rally for the month of January in particular. But investors are gauging the outlook for U.S. interest rates after we got that softer inflation data piece on Friday, which was CPI. Gold is up 14% year to date. Silver, though, is down roughly 1%. That wipes out earlier gains. What's your outlook?
Well, I think first off, I wouldn't chase a move that's gone parabolic like gold has here. And I mentioned earlier in the show, it's not a great long-term investment. And I know I'll get a lot of hate from investors for saying that. But I think what you have to think about in general is commodities as a play here. Commodities are up this year. There's a lot of metals out there that are going to be used in this industrial revolution that we're going through right now. We just have this confluence of, if you think about it, like copper, lithium, silver as well, all undermined over the last couple of years, and you need it for this whole boom that we're talking about, whether it's electrification, AI infrastructure, solar, you name it, it's all needed as an input right now. And if you look at where money's been underinvested right now, especially places like Latin America that has a lot of these mines and has a lot of these reserves. I think more than ever, this is why you want to start to spread your money out, because I know we've been talking about the AI trade forever, but we're not really talking about this industrial revolution that's going on. That's why materials, energy stocks are leading the way this year. Money's rotating to a lot of other places, and I can tell you most investors, because I see your portfolios, you're underweighted in all these areas right now.
No, that's interesting. That's a good point. I want to pull up crypto, Kyle, with you, because right now we're watching a big change in what's happening with Bitcoin. So right now, Bitcoin is at 68,000 and change, so we're just below that 69,000 mark. But that is down 25% over the last month. So there's worries about another crypto winter. Ethereum dropping nearly 40% due to ETF outflows and softer institutional demand. Some analysts are saying Bitcoin could hit 50,000. They say a sharp V-shaped rebound is looking more and more unlikely. What do you make of this, Kyle?
Yeah, it's real difficult in crypto right now. I mean, if you look at the divergence between Bitcoin, which was supposed to be created by Satoshi Nakamoto in 2008, 2009, to offset inflation, it really hasn't worked compared to gold and compared to silver, like you were just talking about. Gold's been up astronomically from 3,000 to 5,000. Well, Bitcoin's really gone from 60,000 to 115 back to down to 60 right now. So I think you do have a lot of people questioning what's going on in digital currencies. But I always think things do revert to the mean. I'd probably be a buyer of Bitcoin, whether you buy Bitcoin itself or IBIT, the BlackRock ETF, because I do think it'll trade back higher. I don't think it's going to go to 30,000. I don't think you're going to have a winter like we did years ago. But at the same time, you have to keep your eye on it. It's a risk-on trade. If you're going to buy it, you have to understand you're making a speculative investment. You're not buying U.S. Treasuries. You're not buying CDs. And one last point, too, back to what Ryan was saying before, it's about critical metals. It's about tungsten. We cannot shoot rockets into space. We cannot shoot cruise missiles without those metals. And I think that's where you're going to see most of the money going, into those absolute critical metals that are for the United States homeland defense, and to stop relying on the Chinese. So I think he's right on point when he mentioned that earlier.
All right. Very interesting take. Buying a little bit of a Bitcoin on the dip. I'm glad you mentioned speculative, though. It's been an interesting trade. Kyle, thank you so much. Kyle Wohl. Ryan's going to stay with us all morning long.